Hi everybody, this is Gary Dean and this is our weekend video report for Sunday, January 8th, 2017. Hope you guys are having a fantastic weekend and a little bit of snow and freezing weather here in New Jersey, so hasn't been too much fun. But anyway, let's get started. So I had one thing that I was following was I was saying that I thought that this was an A, B, C, and this was the A here. And the reason why I was going with that particular count was we had no bullish divergences at this low here. So we saw buyers step in at the moving average there, and we had a gap up on the first day of trading at 2017, and then we pulled back some. So it was in place where it actually made sense, where we still could have been coming back down. But I was saying, we have like technical reasons and wave counts or patterns that were pointing lower, but we had momentum and the Dow getting to 20,000 on that end of it that they were fighting against. And I really had more of a neutral stand because I don't like going long just based on, say, momentum and that type of stuff. It's not the way that I like to trade. But I had said if you're not looking at a long-term type trade or holding on to it for, a month or so, then yeah, you can try the long side and you can try to pick, spots to short. So Friday pretty much cleared a lot of things up because the pattern that I was looking at with the A, B, C of an A, and then we were making an A, B, C, B, and then we were going to come down and make another C, is eliminated because we took out these highs. So that is not the pattern. Does it make it safer to just go long? I don't think so because A, we have the bearish divergences on the 15-minute chart. We have two gaps that are still unfilled here, and that's just in 2017. We now have bearish divergences on the 60-minute charts. And if we look at the daily, we now have bearish divergences on them. So does that mean that we can't go higher? Absolutely not. These divergences can extend for a couple weeks for all we know. But it doesn't make it safe. So yeah, people that go long and are just riding things and it turns into a major trend, it's great for them. They had a great trade and that's it. If you're on the technical end of it, these divergences they throw out red flags and if you're a true technical, say, trader or investor, then you don't buy into these bearish divergences because, for the most part, they end. And when you start seeing the technicals starting to decline as we're heading higher, it just doesn't make things safe, and it usually ends up with these types of moves. So, I'm gonna keep my neutral, say, stand just because you know what we have. A new president coming in 12 days. We still have trying to get the Dow to 20,000. And I think the longer that they hang out right here and not get there, probably the safer it is to just hold on a long trade. But like I said, I'm not interested in that. And like I said, I'm not pounding the table to jump short just because, the momentum, and the euphoria, it takes some time for that to wear off. And it's not there yet. So we just, I sit and wait. I know I have a feeling from these levels, the larger move as far as an intermediate term or a swing trade is going to be to the downside, but we very well could see the S&P at 2300 before that happens. So yeah, there could be 24 points more to the upside, and like I said, you can take that, you can try to ride that, but this is really I think the type of environment that what you're going to be getting are, these push-ups to, looks like we're going to 2300, the pullbacks. It's not, you're not going to get the easy move like this. That, at least I don't foresee that taking place. That once we get towards the top, things get very choppy, and you start seeing, big moves in both directions. And that's usually the typical, say, identification of a top, because tops are rounded. They're not V like bottoms here where we come down and go straight up. they test the highs and they try to get higher. But what happens is you have a high of, we had a high of 2277. We made it up to 22, 82, and then came back below here. So it's, yes, it could go higher, but you're going to get these moves in both directions, and it makes things, kind of frustrating, just because you're not sure what's going on. And then when it actually does break, after having, seeing these types of moves like this, when we come down, nobody really worries about it because they're so used to it getting bid back up. And before, they know it, we're breaking support levels, and then everybody's panicking to get out. And that's typically the time that you want to start looking for some type of low. So if they continue higher, the next stop that you have to keep an eye on is this 2287. If they get through that, then they're probably going up to 2300. I'm not ruling that out at all. I just said I'm not interested in trading that. This is the, let me go to the, yeah, okay, yeah. So this is the line in the sand, let's say the bull bear line. So if the bears get it below this, the tape kind of turns a little bit bearish because, this is support level. They broke above it, and if they come back down and take out this support as well as this moving average right around that 2271, then we're going to get a reaction trade down to this support level, as well as the 23% retracement, and as well as the moving average. So if it pulls back, this would be an area that if it still looks like we could try higher, this would be the area that you would look to buy. If they take this out, then things are changing, because then we're probably coming down to the 2245, or even coming back down here. So this is the first, say, line in the sand that the bears need to push through, is this 2271, and then it goes to the 2259. Bulls need to get it above the 2282 to get it up to 2287, and then the next reaction trade would be up to the 2300. So again, bearish divergences, so it's making things, a little unsafe. I think if it comes down here and you're looking for a quick, scalp trade, if it holds, take it, because we're probably coming up to 2287. If it comes down and it doesn't hold, then I would probably wait for this 2259 and take a stab at it. On the 60-minute chart, though, like I said, we have bearish divergences there. We're very overbought. We had our typical moving average buys come in, and we have a couple gaps. So again, it's just the way that I like to make trades and get into positions. This isn't the setup for me. I would rather wait for things to exhaust themselves. It may take a couple weeks. Who knows? But like I said, I think the larger move, point wise, from these levels is going to be to the downside. So I'd rather just kind of wait and see what happens. And if I get in the trade, I'm going to know mentally that I'm only going to be in it for a couple days, and that's it. Until we reach that exhaustion point to the upside, and then from there, we can probably be looking to take a position trade, because I think this market's going to be erratic, and it's going to be it's going to be very different than the last 8 years that we saw, and I don't think anybody's really anticipating that right now, because we've seen such a constant bid coming into here right now, and like I said, there's a lot of reasons why people could see can be optimistic about the economy and stuff, because of what's going to be coming on with the regulations being removed and tax cuts and stuff like that. So there's reason for it. Now we have to start seeing some of these these programs and stuff that President-elect Trump is saying is going to be put in place. So with that, like I said, my view right now, yes, we could head higher for the next couple weeks. We may get to 2300. It's just not really the type of environment from a technical basis that I like to trade to the upside. If it comes down to the 2260, I'd be interested in possibly taking a quick long trade, but I'm not even sure about that either, just because we have bearish divergences on the daily, 60 and 15, and that's not something I like to kind of cross and just say, hey, I'm gonna buy because momentum's to the upside. So let's see what plays out tomorrow. I'm keeping my neutral hat on, and hopefully we'll get a little more information. And that's it. Have a great weekend, and I'll talk to you guys tomorrow.